Good morning, good morning, good morning, good evening, good afternoon, wherever you are. Welcome to another market update. I'm Freedom Salis. People know me from the web room and from the crypto school. For those that don't know me, you're more than welcome. And I'm here to give you my thoughts of what the market is doing, how it's looking, and what the areas that we need to pay attention. So, no any further delays, let's have a look what Bitcoin is doing. Now, for the people that are following the updates, what we were expecting to see, remember that I said that spoke about for the previous week or two, right, all the way back in January the 8th. So that was 10 days ago. We witnessed together the drop of the 50% of the range, that green line, and that was when we had plan A, plan B, right? Plan A, if it's going to claim, then we're going to go long. If not, then we're going to go short, right? And this is what happened. And the areas that we need to pay attention was the bottom of the range. Okay, so a couple hours later, well, days, I think it was the day after, it hit the bottom, right? And then after that, I said to you guys, if you remember, don't rush to get into any trades, okay? I'll only be interested only and if that I'm gonna go above the red line and above the green line, okay? So what do you see? It pushed all the way up, got rejected, came down, consolidated a little bit, pushed one more time, got rejected, okay? And then it did a deep dive to do some liquidity grab. And remember what I said as well on the previous videos, that we need to pay attention to see if it's going to stay below that line. If it's going to go below the line, like closing only like the 12-hour candle, closing and opening below that line, that will be trouble. What it did, liquidity grab. We spoke about liquidity grabs, right? There was a huge liquidity. We spoke, if you go to the previous videos, you're going to see that we spoke about that there's a lot of liquidity here, right? Going to the left and looking to the left, we knew that we have a lot of liquidity down here. So what did the market did? It just went inside to that liquidity, it grabbed it, cleared the whole space, and then start moving to the upside. And I said, don't panic, right? You can have a cheeky entry if you see that he's, claiming the levels and stop, riding to the upside. You can have a cheeky entry like with small positions just to get the entry, just to get the nice number as an entry. But for me, I will, stay a little bit cautious, and I said I'm going to be always interested only when and if it's going to go above the red line. And have a look at what happened. It went above, hit the green line as rejection, and came back and stay above the red line. That was the time for me. I said, okay, I'm going in, right? And the second confirmation is that it broke above the green line and pushed further up, and then it came back and retested the green line. So we have a break of the red line, retest of the green line, a break of the green line, retest of the green line. Okay, so that is like full confirmation. We're going up. Okay, so what's the next target? The top of the range. That's correct. 102,450. That is your next point of interest. You need to see what's going to happen here for you to decide, are you going to continue or you're going to take your profits. Looking to the left, okay, looking to the left, you know that you have liquidity here, okay, not a big one, but you have liquidity. So let me name this liquidity. Where's my liquidity? Here's liquidity pool, right? And also I have that liquidity over there. But to be very fair with you and honest, that liquidity pool, I'm going to mark it over here, that liquidity pool over there got mitigated by this one, okay? So the price came up here and mitigated that liquidity pool. But because you have a very sudden move to the downside, now you have a fresh liquidity, okay? So you can forget about the liquidity over there, but you have a fresh new liquidity. And what forms a liquidity, right? I'm going to say very fast. Entries, stop losses, and for the people that they didn't use stop losses, you're going to have liquidation prices. So all this together is creating liquidity pool, okay? do we have another liquidity pool above? Yes, we have another liquidity over here. Okay. Do we have a further up, higher, another liquidity? Yes, we have another liquidity over here. Okay. So all these three areas here are liquidity. Okay. Look to the left, and this is what you have. This is the all-time high. This is, this is where everything took place in this level here, 108, and everything dumped. Okay. So that is a huge liquidity area. So now we know that this price action has 3 points of interest, none onwards. Okay, this swimming pool, yeah, we've got a swimming pool. You can call it a swimming pool as well, because it's going to dive in, right? It's going to dive. They're going to dive. The market makers, they're going to dive. Okay, price action is going to dive inside the pool. So you have 3 swimming pools. That's why they're all nice and blue, right? Nice and clean water there, full of chemicals, but yeah. So here's your liquidity pools. So we've got 3 points of interest areas. Okay, so what is next? Well, you need to see what the price action on the smaller time frame. This is a 19 minute. Okay, go down to 22 minutes or 15 minutes. Don't be scared. Have a look. Also, look at that. We are still in an average, okay, we're still in a good uptrend. You do have some deviations, some fake outs. You had a big deviation here, liquidity grab, and here it came down to clear the imbalance. When you have a sudden move, it creates imbalance. We spoke about imbalances. The market is going to revisit and trying to bring the price action back into the balance. That's what it is. So every huge spike that you get, like this one here, you get a spike. What happens? It comes back to bring the price action into the balance. So if another trick for you to remember, something that goes very fast up, it will come down very fast into that area. Okay, so it went very fast up here, and then it came back very fast to bring the balance, and then it came back and continue its course, right? And that is, again, you may call it a retest, break up all the green line, retesting the green line. Yeah, it's fair enough. But also remember that the market wants to bring things into the balance, and also if they see it's been a high manipulation going on here, right, they're going to calm down and clear the manipulation out. Okay, manipulation, I'm talking about the abuse from the traders that they go in with high leverage. Okay, they go in with 50x, 60x, 70x, 100x. The markets do not forgive this kind of behavior. Okay, they're going to go after you. So if you're not quick enough and you didn't manage to get out before the market's going to dump on you, you're done. They're going to kick you out, and then the market's going to carry on. Now, this is where we are right sitting here. Okay, it's 102,000, and you need to pay attention to what is going to happen into these levels. First scenario, okay, it's going to fail to break up over the range, and you see a consolidation, and then you see a fall down. That is a first scenario. A second scenario, okay, you're going to see some point that it's going to penetrate, and then it's going to come back again. Okay, so what it's going to do, liquidity grab, and then it's going to change course. A third scenario is it's going to penetrate, and it's going to hold above and then continue. So you see, you have 3 options here, right? 3 scenarios. It's not an option, but it's the 3 scenarios that you need to pay attention. Either it's going to get rejected, not even trying to get out of the range. Either it's going to do a fake out above the range, or it's going to do a true penetration and going to stay outside of the range, which is against super bullish. So what you can do? Well, one theory, like the one strategy, so to say, what you can do, once it's going to hit 102, okay, you can take out 20% of the profits, book them, okay, put them on your wallet. Okay, when I say book them or bank them, it means you take out 80%. You leave the remaining 20% there. Okay, and when and if the price action, it stays above and it continues, you add back that 80%. Okay, and with this kind of action, you do 2 things. A, which is the first and the major thing, you preserve your gains. Okay, you had gains from here and from here, and you're going all the way up. You need to secure these gains. Okay, put them in your wallet. Make sure you don't give it back to the market. That's the first thing that you do. The second thing that you're doing, okay, after you're securing your gains, okay, when and if the market's going to go further up and you decided to continue, you're going to put all these gains into work. So you're going to put these gains as capital. So you're compounding your position. I hope you understand this. Otherwise, if the market, is going to fail breaking above and it's going to come down, because you have only 20% remaining, okay, and if you see that the structure is just failing and is creating a new downtrend, you're not going to get damaged because you only have 20% left. Okay, so it's very important for you to make sure that if you make money, if you are in profit and you have some gains, secure them. Okay, because the markets don't forgive. Remember that the markets are not designed. They're not designed in such way for us to make money. It's been designed to draw our attention, to build up and feed up our greed. We want more and more and more. We never take profits, and then the market's going to dump on me, and then it's going to take all my money. I'm going to give back my profits, and then it's going to target my entries and my stop losses, all my liquidation. If I'm really silly with my positions and I haven't used a stop loss, then it's going to go after my liquidation price. Okay, so please be careful. Have in mind that for you to be successful, you need to have a very decent risk management tactics. Okay, and that it needs to become a habit. Take the profits, bank them, and if the price wants to carry on, you re-enter, you put that money back, and look at the magic. So let's say that I'm gonna do round numbers, okay, for the example to be nice and clean. So let's say my entry here, my position size is $100, okay, and it goes up, and my position right now up there it's plus $100, okay. So now I made $200, okay, because this is my initial entry, okay, and this is my gains, 100. So let's say I had a 100% profit. Cool. So now you're sitting with $100 extra. If you take out your money 80%, it means that you're gonna take out from the 200, you're gonna take out 80%. Okay. So taking out 80%, it means that you took out 160. Okay, it means that you took out your initial capital plus 60 out of the 100 that you made. Okay, so you have remaining $40 here. Sitting here, you've got remaining $40. The remaining is way less what was your initial entry. So if the price is going to go down, it's not going to affect you a lot. Okay, you banked 160. Okay, and you have 40 remaining. If the market decides to go above, you're gonna put that 160 back, and now your position from this point onwards, it's not gonna be 100% there because you're gonna DCA. If your entry is here and then you're gonna put 160 there, your average price could be somewhere down here. So from this point onwards, your position size is 200 right now. Why? 40 that you had remaining plus 160 makes 200. So you double your position on the second push, and you're making more profits. Right? Now, instead of having $100 working for you, you have $200 working for you. And the more it goes higher, that percentage, whatever that percentage goes higher, is going to give you more returns. Okay? So you see what you're doing here? You do a double action here. You do two things. You preserve the gains. You made some gains. Make sure you book them. And then after that, you're going to put these gains into work. And then it's going to compound your winnings. And, this is what you need to do. Every day. Compound. Okay? So, let's have a very quick look about the other stuff here. We spoke about Bitcoin. And because this is not a live audience, I don't have a live audience, so I don't know which tokens you are interested to look at. I'm gonna go to the cash flow. Here's my cash flow. I have 3 screens here, so sorry for me that I'm dragging screens here, but yeah, I've got 3 screens here. So let's talk about the cash flow setup. And you know what the cash flow is. I'm gonna go very quick with it. I have Bitcoin index, which is the price of a Bitcoin. I have my dominance. I have my T1, total 1. Okay, here it is, spike up. That's a good thing. Now you have T3. Total 3 is all the market cap except Bitcoin and Ethereum. So this is the alts. So alts are spiking. T1 is spiking. T1 is everything. Okay, everything, including Bitcoin, Ethereum, alts, everything. So we are sitting at 3.5 trillion. Cool stuff. Okay, we broke the previous all-time high from the previous cycle. Okay, and the previous cycle was 3 trillion. And look what the previous all-time high, it acted as a support. And you have a downtrend. And now, finally, we're breaking out from this descending triangle. It's a breakout pattern. Hallelujah. All right, we're gonna move. Let's move. Okay, so for the alts, okay, we haven't seen yet the alt season, right? I promise you, we haven't seen the alt season. Why? We didn't even, we touched the previous all-time high from the previous bull cycle, but we never breached it. T1 breached it. It went above. So you know that a lot of people are pushing Bitcoin and Ethereum. Why T1 is above all-time high? ETFs, okay? A lot of companies are pushing Bitcoin. A lot of people are buying Bitcoin. What about the alts? They're here. They haven't broken the previous all-time high from the previous cycle. And maybe they're going to do it now, okay? So you see, it's going up. So how do you translate this? That you have fresh money, income money, go into the crypto space, okay? And you can see it from T1 and you can see it from T3, okay? Down here, dominance of the Tether, which is a stable coin. What do you see? Dropping. What does it mean? That people are moving away from Tether and they're going into where? Into crypto space. Why crypto space? Because I see that it's going up. If that wasn't going up and that dominance was dropping, then I will have a different conclusion. That's why I call it cash flow. I need to see where the cash is going. So if T1 wasn't going up, T3 wasn't going up, and dominance was dropping of the Tether, then I know that people are moving away from the stable coins and they're going to fiat. It means they're moving out. They're dumping Tether, but they're not buying crypto. Alright? Why? Because that wasn't going up. If that was the case. Okay, so now you understand why I have these 6 charts here for me to understand what's going on. And also, on the bottom right here, Dixie, it's the dollar, right? I would like to see how powerful the dollar becomes. And that correlates, okay? 85%, 90% of the time it correlates. If they don't correlate, okay, then I know there's a manipulation. So this chart again is going to give you an idea of what is going on. What are they trying to do? So when DIX is dropping, which is the dollar, I should see Bitcoin rising. Why? Because we are comparing Bitcoin against, right? We are comparing against USD, the dollar. And DIX is the dollar. So if the dollar gets weaker, then Bitcoin becomes stronger. And then I need to see these 2 charts. If DIX is dropping drastically and Bitcoin is going up, but T1 and T3 is not moving, then I know that the price of the Bitcoin is being affected because dollar was getting weaker and that there's no volume, there's no trading volume, there's no fresh money that people buy into Bitcoin. So then I know that move is not going to be sustainable. Why? Because there's no backup, there's no volume, there's no trading volume. Okay, so this is why I have this cash flow, I call it cash flow chart, and it helps me to understand where the money is going. Okay, does it come into the crypto space or does it leave the crypto space? Okay, is Tether going strong or it doesn't? Okay, so that's it. It's named cash flow. You can find it in the links under the video description. I have a Google Sheet that I have all the charts here. All the links that you see here up there are all my charts that I have on the Excel. So this is Bitcoin. Let's have a talk and let's have a look, very quick look. You see, it's pushing up. It's approaching that level. It's the level, it's the time that you need to make a decision. Shall I stay or shall I go? Shall I, book a profit? You can have 90%, 80%, it's up to you. 85%, it's up to you. Right, okay. Let's have a look. Let me save this. Let's have a look on Ethereum. Let's go first to Ethereum and see what Ethereum is doing. Lovely. Let's pick up our Ethereum. Ethereum, it was pushing. I mean, this is the 3 hours. It's fine. It's fine. It had a huge imbalance on its way down. Okay. We mark this on the daily. If you go to the daily, it will make sense. Okay. Let's go to the daily. Daily. You see that huge gap between the first candle and the third candle. The second candle is a huge candle. So you have, an area that you mark from the bottom of that first candle with the top of this third candle, including the wicks, okay? And that creates imbalance. And every time you know that what's going to happen, it's going to go after the imbalance. So it got pushed up into the imbalance and then it got down, okay? And now it's trying to push up again. So let's go to a smaller time frame, 90 minutes. It's fine. Here it is. Okay. So it came down in balance. And I said, I know that the market's going to come up here to attack the imbalance. Then exactly the next move, which I need to pay attention, most likely, majority of the times are 85% and 90%, is going to react and bounce off. There are some times that's going to break through. Okay. That happens when you have big boys that are supporting the upside movement with huge funds, right? And it's so strong, it can go through the imbalance, and these all previous orders that they're trying to short, they are not strong enough to stop the price action, okay? That's a different story, but I'm just explaining the two scenarios that you may have when you're approaching an imbalance. Either it's gonna get rejected, which is the most expected, the normal thing to happen, but you have some exceptions, and you see that the price can break through. It happens, okay? Don't be surprised. Now, another sudden move that created more imbalances, okay? So I had to mark my area. You see what happened here? It broke through. It just went through. It wasn't a very strong imbalance, but because of this huge liquidity grab, okay, the price just went through, okay? It found a point of rejection. You see the 3248, it got rejected, it came down, and now this imbalance, right, it was acting like a support. And you're like, oh, nice, I like it, okay? So what do you have? You have a low, a higher low, and then slightly a higher low, okay? This is a nice, lovely cheeky entry. You have a same level, 3185, as a common support, and you're like, it has no intention to go lower, okay? Because if I ignore this price action, what do you have? A high, a low high, and that was at the time current low, a lower high. So you say, oh shit, it can't go any higher, cannot break the previous highs. I don't think it's going to go any further up. And then you see that it's losing it, right? Rejection number 1, rejection number 2, it comes down. And then later that day, because this is a 90 minutes, it's telling you, nope, support. And you're like, interesting. I see you. Okay, so we're holding this as a support. Okay, as a support. Interesting. So it broke the previous levels. That was a good signal for you to go in, right? Anyway, tapped into the previous imbalance, got rejected as expected, and then you can see the flip. When an area, this level, the 3248, acted as resistance, now it's acting as support. So if you miss that one, time-wise, okay, you wake up on your time zone, and it happens for you to be here, okay, you miss that one because you were sleeping. It's fine, it can happen, you can't be like a bot 24 hours awake on the front of the screens. It has to do with timing, but you need to see the evidence. And I say, hey, rejection point, hey, a flip. Now we're acting as a support. Once, twice. You have a low and a higher low. What else do you need, right? What do you need? You need now to break the structure. You need to see a continuation, okay, to be super bullish, okay? So now you see that Ethereum is pushing to the upside, okay? It's pushing, and what will we need to see? We need a continuation of keep on breaking the previous highs, okay? It broke that previous high, it broke it, okay? It broke that previous high, it broke it, it created a new high, and now we would like to see a continuation. So ETH is moving. The ETH ecosystem is moving, finally, okay? It's one of those days that we're expecting, we were waiting, like here, okay? Consolidating, and then boom to the upside. And obviously, it came down to that imbalance. Oh boy, it went down, didn't it? So, is this a, this is a time for us to move on? Yes, we would like to see a move on, but break that high, okay? Break that previous high, and I would like to target this high. What do you have up here? Now you have the imbalance, you know that you tapped imbalance, so that imbalance become weaker, if not mitigated, it's definitely weaker, okay? So where's your next point of interest? Up here. Why? Liquidity zones. Look at that, liquidity here, liquidity here. That liquidity has been taken out, but it created new liquidity. Look how sharp that move was down. So that was tremendous pressure to the downside. So what do you have? Selling side liquidity. You have huge liquidity from people that are shorting or selling Ethereum. So your next target, well, first target was imbalance. Now your second target, or the second point of interest, is going to be your liquidity zones. So if you're going long on Ethereum, be careful around 3684 and around 3746. What are you going to do? You're going to preserve your gains, right? Remember, you need to protect your gains. Take out 80%, 85%, 90%. Bank your profits, your gains. And then when and if the price action is giving you support, a flip, that was resistance and now it's going to be support, it's another move to the upside. Okay? And then you're going to target the 3871. These lines are no joke. Okay? People that they follow me, they know how I draw these lines. People that they don't follow me and they don't know, go and jump into the web room. Okay? And I'll show you how I do this. Okay? Go and join the web room. You want to find what is the web room? Go to the under the video description. I have a link. It's going to open a bunch of links. The very first one is the web room. Go grab it. Okay? And you're going to learn how to do this. It's a secret. I can't tell you here. All right? People that know, they know. Now, let's go and have a look on Ethereum against Bitcoin. Okay, this is the pair now, the majors. No, that's the Bitcoin dominance. It shouldn't be here. It's the wrong chart. Let me change that. No, we want ETH against Bitcoin, please. Here we are. I'm going to use Coinbase. There it is. That's the right chart. Now, what do we want to see here? Let me save that. I don't know, accidentally it just shifted to a different token. It shouldn't. My bad. I apologize. So let me go down to maybe 3 hours and let's have a look what is going on. So you're comparing now the performance between Ethereum and Bitcoin. Okay, the two majors, the king and the queen, or whatever you want to call it. Okay, who's the queen? Who's the king? Is a Bitcoin the king or the queen? I don't know. I don't want to get into this kind of relationship here. Don't mind me. I'm just having fun here. So you have the two majors. It's better to call it majors. It's fine. All right. No one gets offended here. Who's the king and who's the queen? So here we have the two majors here. Okay. And what do you see? Now, because the first of the two pairs, the first one is Ethereum. Now you understand this is the performance of the Ethereum against the Bitcoin. So Ethereum is going down. What does it tell you? It tells you that Ethereum doesn't mean that the price is going down. It's just telling you that the performance of the Ethereum is weaker against Bitcoin. So Bitcoin is more stronger moves. Either side. That if it goes down, it doesn't mean that the price is going down. Maybe the prices, both of them are going up. Like Ethereum goes up, Bitcoin goes up, right? But this chart is telling you that Bitcoin outperforms Ethereum. right? So Ethereum is eating the dust from Bitcoin. But when you see that Ethereum is picking up, it's telling you that the Ethereum is overperforming Bitcoin. So somehow, Bitcoin pauses, right? And then Ethereum runs, okay? And then it comes back, it dropped it again. Bitcoin was like, hey, you're not going to win this race. I'm stronger than you. So here it is, Bitcoin dumping on the Ethereum. So Ethereum came back, and now Ethereum is telling you, hey, you know what? This is my support. I'm going nowhere. So I had marked this line way before here. I'm like, okay, I see a support here. I see a support here. This is not tradable, right? So this is not money. This is Ethereum against Bitcoin. So we're not talking about liquidity. We're talking about supports, right? That's okay. Common support here. And that was a little bit deviation on the same area. So you have another support here. So you have a big support here. So what Ethereum is trying to say here, I said, hey, this is my support. I'm going to defend this level and I don't want to go lower. Okay. So it's trying to do this. And kind of like this is your low, high low, equal low, right? And what do we need to see? We need to see that Ethereum can beat Bitcoin. And remember, the crypto space, the whole crypto, it goes into turns. Okay. So first one, it's Bitcoin that's going to move. Okay. The first major, the king, the queen, whatever you want to call it. Okay, then it's going to be Ethereum. It's going to follow later. So when Bitcoin's going to pause, then ETH is going to have its turn to run. Okay, so what do you have here? Ethereum running. Okay, what do you have here? Ethereum running. I mean, if you look at here closely, that is Ethereum overperforming Bitcoin. Okay, so you had Bitcoin running. Look at that huge dump. So it's telling you that if a Bitcoin is running, is overperforming Ethereum, and then it turns around and says, Ethereum is my turn now for me to turn and move. Okay, this is how you're going to translate it. So far, let me clear this Picasso mess. So far, we have Bitcoin dominating, right? We would like to see the second phase. That's the first phase, Bitcoin dominating. Now we need to see Ethereum dominating, okay? And then after the Ethereum, the third phase is the altcoins. Remember the cash flow? We haven't broken the previous all-time high from the previous cycle. So we still have room to move, okay? And time-wise, if you time the length of the bull cycle of each cycle from the Bitcoin, we haven't reached that time yet. We've got another good year, but I'll be cautious after the next 6 months. So today, we are in January. So after May, June, I'll be on my alert. Okay? But I'm not going to say I'm going to exit the market. No. What I've done, I shifted gears. People that follow me on the web room, they know me, that I moved from the spot into perpetuals, okay, to the futures. I'm using leverage now. So I've done with my spots and now I'm going with futures. But when that time comes, like June, July, then I need to make sure that I preserve all my gains. I'm going to start taking things out slowly, okay, until the very end. Right, and then I need to prepare myself, for the downfall. So we spoke about Bitcoin, Ethereum and Bitcoin. We spoke about as well the ISO on the previous video. Do not ignore the ISO token. So let me go to HBAR and look what HBAR has done. Okay. We spoke about it down here that it will start moving. I said, guys, HBAR is moving. It's not only HBAR, it's all the ISO community tokens, 7 tokens of them. Okay, XRP, ADA, XLM, you got HBAR, IOTA, you got all of them. Okay, so they are moving, and look what happened here now. It just run through all my lines. Okay, if I go to the 90 minutes, you can see what's happening here. Okay, so now I need to enable my extra extensions, the magic power. So let me go to extension number 3, and now I know what is going on and what levels I need to pay attention to. Okay, so overall for H1, I mean, look at that. Okay, we moving to the upside. So I'm going to do this as an average. Okay, here it is, and then it's changing angle, and you're like, you're getting stronger. More people paying attention. It's getting stronger. And what do you have now? The break of the trend line. Okay, but you don't need to wait. I mean, for people that love trend lines, this is how you do it, right? You need to update the angles. You need to watch out for these angles. Okay, you update the angles, and once you break the angles, you break the trend line, you're like, something's going on. But for me that I follow the horizontals, I see that it could not pass, okay, 0.40, 40 cents. It could not go higher than 40 cents. Rejection point, okay? Did it maintain the 39 cents? No. Did it maintain the 38 cents? No. So, it's keep on losing levels here. So you know already that 3 levels have not been, respected. This is the right? Especially that you broke the previous high, it did not act as a support. That's it, you're done. Okay, so my moment is on 38 cents over here. Your moment is further down, 37 cents. Okay, not a big difference, but if that was a parabolic move, it would be different levels and prices. Okay, not a big deal. Both strategies, both approaches are working just fine. I just like horizontals. It's more straight, more nice, more cleaner to me. Okay, trend lines, beautiful. You know me, I see the trend lines as well. I have, for people that they cannot do the horizontals, they can do the pitchfork. I gave you a hint here. So go and see the video about pitchfork. Okay, right, ladies and gentlemen, we are 37 minutes into this video. I'm not gonna keep it any longer, but it's the market update for today, which is the 17th of January. Happy name day to to the Orthodox. They believe, the Orthodox, the Christians Orthodox, they have name days. So today is a name day of Antonis and Antonia. So happy name day to them. So that's it from me today, ladies and gentlemen. I shall see you in a couple of days. Be safe, trade wise, okay? Like our run says, trade wise, be safe out there, and respect your rules, okay? Risk management, it's the one that is gonna make you successful. The strategy, you need to have one strategy. I keep on saying that. You only need one strategy. But the strategy is going to help you to have a routine, to keep on doing exactly the same thing, right? It's like a gear in the engine. It goes round and round and round. It doesn't go anywhere else. It doesn't do zigzag. No, it goes round, okay? It has 20 teeth or 16 teeth or 25 teeth. That's it. It goes round within these 25 teeth. It doesn't do anything else. Exactly the same thing all the time. Okay? So at the minute you start your engine until you close the engine, you switch off your engine, that gear goes round and round and round and round. It doesn't do anything else. So your strategy is a routine. You need to keep on doing exactly the same thing over and over and over again. Okay? But what is going to make you successful is going to be your risk management. You need to know when to back off. You need to know when it's time to say, I need to stop. We spoke about risk management. I will speak again about risk management. I'm going to do another video only speaking about risk management, which is going to like the subject that when do I need to stop? What are my targets? Okay, where is my stop loss? Why we call it stop loss? Think about it. Stop the loss, right? If I'm going to lose, I need to have my stop loss. So it's your lifeguard. It's not a bad thing for you to get hit by stop loss. A lot of people have a negative effect, a negative feeling about stop loss. Oh my God, I got hit by my stop loss. It's a bad thing. No, it is not a bad thing. It's a great thing. It's your bodyguard. It just saves your ass. Okay, it stopped your losses. So be glad that you had a stop loss there, a bodyguard, okay, a guardian angel, whatever you like to see it. It's there for you to save you. Okay, if something goes wrong and you don't pay attention and your emotions are taking over, the stop loss is there to remind you, hey, this is an invalidation point. Beyond this point, it's no good. Close it. Save the money. Preserve the money. That is risk management. Okay? Right, okay, that's it. I don't want to keep it very long. Have a very lovely day. It's Friday as well. So have a good weekend. Take your time off. Remember, don't trade 7 to 7. Trade 5 to 7, Monday to Friday. Okay, when all the institutions are online as well. Crypto never sleeps. We know this. You can trade whenever you want, but have a plan. Okay, this is a business. Okay, after Friday, it's time for you to go to your family. Okay, you have a family, you have friends, you have hobbies, you have things to do. Okay, you're not going to get stuck glued on the screen, right? So take your time off. And if you got some gains and profits, book them, enjoy them. Go out and buy yourself a dinner. Whatever you want, clothes. Go to cinema. Go to get a vacation. Go to, to another city, book a hotel and enjoy, your weekend with your loved one and say, hey, this is because of, I had a very good week. I made X amount of money. Today I'm going to treat myself and my loved one and, have a nice weekend. That's all. You need to enjoy your life. Have a great weekend. Okay? Enjoy your life. Filled up your batteries. Charge yourself up. And come back on Monday. And on Monday, you're not going to jump on trades. You're not going to do, you know what you're going to do on Monday. You're going to observe. You need to see what the market's doing on Monday. And then you're going to take action by the end of Monday on Tuesday. Relax. Okay? The markets are going nowhere. They're going to be always here. If you have the mindset of spot positioning, you're going to be just fine. Okay? Don't overexpose yourself to risk. We are taking risks, yes. Every day, on every trade, we're taking risks. Okay? But in overall, for you to be successful, you need to calculate that risk. Okay? Don't go reckless. Do not confuse risk with reckless. Okay? They both start with an R. Okay? Don't confuse them. Yes, we take risks, but we calculate our risks. And we know that we go for the best possibilities and probabilities. If the market's going to turn around, tough. We don't care. It's not our problem. Okay? It wasn't me that I dumped the market. Somebody else did. Is it my problem? No. Why? I have risk management. I have stop loss. I have a plan. I have a strategy. I'm strong and I don't care. That is the attitude. I don't care. I have a strategy. I'm not reckless. I know the risk. The probabilities was my side going higher. It didn't. It hit my stop loss. That was part of my risk management. I'm safe. I'm not reckless. So, that's it. The wisdom words are done. Friday, close the whole thing. Enjoy your weekend, okay? And I'll see you from Monday. Have a good one. Best wishes to everyone. And much love. Thumbs up if you like the content. Leave a note. Leave a message below if you liked it. If you didn't like it, do the same thing. Leave a message. Hey, Harris, I didn't like your content. And I'll fix it. I'll try to see why you didn't like it. Okay? Not everyone likes pasta every day. So you have your say. Right? I'm more than glad to see, communicate with me. Alright guys, ladies and gentlemen, that's it. Enough of me. I'll see you from Monday. Take care. Have a lovely one.